What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we'll be taking a peek over here at the Bitcoin price chart, along with the altcoin market, as the price of Bitcoin has reached as high as almost its 786 Fibonacci retracement level over here, eclipsing a little bit over $68,000. Meanwhile, we have the Russell 2000 over here battling on top of the 786 Fibonacci retracement level, as we have Bitcoin pulling back today. Now, what I'm going to do in this video is kind of paint a picture of the way I'm looking at the market currently right now. A lot of these things you've already heard, but I'm just going to try to tie the whole picture in together on why it seems likely to me that there's going to be a range that gets built here for Bitcoin and eventually a range that gets built here for the altcoin market before things can shoot their way up. First things first, great accomplishment there for Bitcoin to be able to get through the 702 Fibonacci retracement level. Not that we won't cross back down below it again. However, we've seen this many, many times in Bitcoin and in the altcoin market. That's a historical super danger zone in the market. Great to see it get exceeded. We talked about this on Monday before it got through, that even if it did, likely be ABC correcting that takes place after that. But I'll walk you through my mindset on why I think that is, why I still think there's going to be an ABC that comes out of here for the altcoin market, and why still not convinced that we're like in super breakout happening here for the Russell 2000 just yet. If you're new here and wondering why are we looking at the Russell 2000, it's quite simple. This is what Bitcoin follows. So we can start right here because this is the thing that obviously is the big news, to see us getting on top of the 786 Fibonacci retracement, along with us actually closing our first day above there. We have not broken back down below it. So right now it's just checking to see if it's doing a little bit of a back test there today. And we'll see how things get going as the day goes on. However, while we are looking at the RTY, we can look over here at IWM, which is the iShares Russell 2000 ETF. And we can see that the daily candle actually closed a teeny tiny itsy bitsy hairline just below at 226.74 when it resides at 226.75. And then as we are in pre-market right now, we're at 226.45. So this one has not gotten through, and it closed literally 0.01 below. So we'll see how things go in here today to see if that has continuation. Things that we've looked at with the Russell is just how these structures can play out. So far, so good. Even if it does kind of continue to march up in there, we've seen these before, and these can do these types of things. And so far, that's really kind of mirroring what it has been at this point. In the event of one of these, right, this is really what happened back in 2016 and 2017. This is the actual expansion of the market. And this is where the cryptocurrency market took off back in 2016 and 2017 as well. So doing something like that would still delay with an ABC coming out of here. And while we still haven't gotten this one to get out just yet either. For that, if it's still looking like the broader markets are going to continue to kind of waddle there until we get through the next month, and that we've seen Bitcoin really follow exactly what the Russell has been doing, that would likely mean it's still just going to kind of chill out in here for some time, considering these two have acted so uniformly with the Russell here on the top and Bitcoin here on the bottom. But that would also have confluence with other things we've talked about of what accumulations look like once we reach the bottom of ranges, and how those accumulation schematics can end up playing out in here. We've spent time talking about looking for something like an ABC, and to just give a quick little example of something like that, it's as if we've already done the full crashing structure. And I'll take this off the screen for us here, but these things can take time. And in Markets in the Morning yesterday, I was saying, I'm not so worried about the price action. I'm more worried about what sentiment will be like during this time, because we've been through these things before, and sentiment gets absolutely annihilated in things like this, where you just kind of trend up, ultimately to break it, and then things can work their way up. There's all phases of the crashing structure already played out here for the cryptocurrency market, as this example has been used many times throughout history for crashing structures. But 1, 2, 3, 4, 1, 2, 3, 4, 5, for 5, back to wave 4, within wave 5 for 6, and then 7 sets the new low. Then we move on to the grueling part. Moving back to the left, that's also what we went through in here, right? 1, 2, 3, 4, 1, 2, 3, 4, 5, for 5, 6, back to wave 4 within wave 5, and 7. The breadth opens up in the market for the first time after being closed all of 2022. Then we move into the grueling part. And in this case, we have ABC. This is the classic crashing structure. This has all those same appearances on the smaller time frame, rather than having a quick, violent crash and then doing a retracement and then accumulation, crash, retrace, reaccumulation. We've done the 1, 2, 3, 4, 1, 2, 3, 4, 5, back to wave 4 within wave 5, and then 7. And then this is where things can get grueling. Instead of having a quick retracement, we just stay down here. The challenge with these is if they're going to set another new high right here, or does it pull back and then comes up and sets a new high, or does it just stay here before ultimately doing this? This is where retail sentiment gets utterly ravished if we have to go through that, which to me seems pretty likely that we do. In the event that the Russell is doing something along the lines of that, well, you would think Bitcoin's going to do it too, right? And when we look through the ideas that we've been talking about for Bitcoin on how this time is going to play different than what people are used to seeing in here, if it's this style structure, it's a lot of waddling in here, right? And that's exactly just kind of what we're seeing happening over there when we're looking at the price chart of Bitcoin, we're looking at the Russell 2000, we're looking at the altcoin market, that a lot of waddling could take place in here before it's ready to go for a full-blown break. Now, I could come on here and paint this in an entirely different way and say, oh, get your moon boots ready. Load it up. Look what's coming. Very soon, we're going to have this happen, and then we're going to the absolute moon, right? I could paint it in that way, and I mean, that's the idea of all of it, right? But I've been through several of these things before, and the hard part is, like, if there's a month or two of this having to play out in here, the sentiment really gets ravished during that moment. And a lot of people who, you've probably heard me say this on the channel, and most people weren't hearing me say this when I talk about the 22.5-cent time period for XRP back in 2020. There's a few people here who know that. Most people do not. But those people who were here, you'll see them comment in the chat all the time during markets in the morning saying that period was so brutal. Oh my gosh. And it's kind of like saying going through that. And that's what that was. It was like you've already hit that, but you're having to kind of go through that aftermath period of it. And just the way to think about the whole thing is Wyckoff accumulation happening in here. And that's your automatic rally. That's your secondary test. This is your secondary test in phase B working out in here. Then you wait for the ending. Does the ending have just a simple ABC? Or does the ending have the classic 1, 2, 3, 4, 1, 2, 3, 4, 5, back to wave 4 within wave 5, and then it concludes itself with the crashing structure right there at the end, which is what this is. You can just see all the phases in there of that's how that ends up happening to conclude itself. And it's very common to see that in the spring phase ending in here to get the crashing structure. It's even what we saw for Bitcoin back in 2015, but also very common to get the LPS, which is the last point of support, which is just simply an ABC like we see in here. And I know we're getting tied in here to a really small time frame, and we're talking about just a particular range, but conceptually in these whole things, when you do these crashing structures, it's just so common to go back to the retracement level, pull back range in here, and then go for another leg. And we can even look at XRP when it literally did another crashing structure and did this whole thing, which is right here after the SEC lawsuit. You have 1, 2, 3, 4, 1, 2, 3, 4, 5 for 5, back to wave 4 within wave 5 for 6, ultimately leading to 7, back to preliminary support, ABC, escapes, pulls back to preliminary support, builds a new range. This range, of course, is a violent crash, retrace, reaccumulation. But ultimately, after this, you go into retrace, you pull back to preliminary support, you range on top of the preliminary support, and then ultimately go for another leg to the upside. And that is the concept of what we're seeing happening in here after doing the crashing structure, back to the retracements, back to the preliminary support, now ranging. The difficult part on things like this are these periods. And it's nothing new. It's nothing unusual. It's just part of the process. And you can go through all the charts you would like to, and you will find them scattered everywhere all the time. And, well, it's really just exactly what we had to go through in here. However, I do not think it will be to this extreme and take this long. And so this just kind of gives you additional visualizations, which we've been talking about for weeks now. We've talked about it in the videos. We've talked about it over there on Twitter. All concepts are the same. There can be a couple variables to how this thing looks in here. And as we approach it, we'll look closer. We'll see if this thing does more of the very simplified A, B, C, or if it does, like we just talked about, more of the crashing style to finish it off. These are typically the easiest ones to spot in here once we get kind of deep into them. Particularly once we get to the sixth wave that's pulling back up to the fourth wave within 5. That typically becomes the easiest way to spot that. You're kind of waiting for that last one to come in there, and that's your final moment. And you're looking for things of signs of capitulation throughout the market. Maybe a bad narrative, a liquidation event happening in the market, things that can draw the conclusion of that move, right? And even just zooming in on this range over here, right? Moving away from looking at one like this, but looking at the one that does take place right here, you can even see that it kind of concludes like that as well, where it's grinding its way up. Finally, it breaks that, right? 1, 2, 3, 4, 5, back to wave 4, and then boom, that's the final ending down in there. So just continuing to look around, right? I'm just psychologically preparing myself that something like this is still going to work itself out throughout the market through here, but having to keep the eyes on the prize of the bigger picture of what comes next after that draws itself to a conclusion. All these structures we're looking at says the bottom was in. We saw a breadth opening happen in there. We saw that same thing happen down in here on the lows. Thing is, these things just usually take a little bit of time to work themselves out in here. People's psychology will get tested. Everybody cares about time. How long, how long, how long? I'm right there with you. This has been the longest we've ever dealt with. You could see that by looking at Litecoin conceptually, how long this has been in here. You could look at the peak of the 2017 bull run, look at the peak of the 2021 bull run, grab them. Look how long you've been in here. The class of 2018 through 2021, you had already been through the whole bull run, and it had already topped at that point. I know nobody wants to hear more patience. I agree with you, man. I'm right there. But big picture, it's not looking so bad. But I think it just continues to reiterate there has not been an expansion in the United States stock market. And the time that elapses beyond these block reward halvings gets longer and longer and longer every 4 years. But the thing that is consistent are expansions happening in the markets. And we just haven't had one yet. And you're getting to see that we're going the longest we've ever gone because there hasn't been an expansion. But what I'm trying to show here is if we're setting ourselves up for one, well, then that's optimistic for everything. And so I come in here and try to paint the picture with multiple things, right? Whether we're looking at it from the Russell or we're looking at it through the perspective of what full structures look like we're looking at over here for Bitcoin, to try to tie multiple things together. And then through the lens of the altcoin market and the whole big picture of what happened in here on how there was a big crashing structure for all of 2022, back to the retracements, back to the preliminary supports, and that we tend to do that in those style structures. And then you just have kind of an accumulation that happens in here. And so trying to tie all of those big pictures together and say, hey, this is the lens that I'm seeing things through right now. Things aren't looking so bad, but this would indicate there's some grinding to have to happen in here. This would indicate that there's some grinding that has to happen in here. This would indicate that there's some grinding that has to happen in here. And here's additional examples of it. But ultimately, it led to things going higher. It led to things going higher. And it led to things going higher. That's the lens I'm looking at it through right now. But having to keep myself in check on being like, man, it sure would be nice if we broke out today. No doubt about it. But I see several different things that kind of say there may have to be a patience factor in here. And that's consistent with what we've talked about for the last couple of weeks. And I try to present this and I'll be more than happy to just get surprised and the thing just shoot to the upside. But I feel it's important to talk about it because we've been through these moments before here with the YouTube channel. Next month, it will be 5 years that I've been making YouTube channels, and we've been through multiples of these before. And the sentiment on Twitter becomes ravishing. And it's having to step out of that short-term time frame stuff and think about it in the bigger context picture of what's going on. We'll put out a video on XRP this week. There's a lot going on out there right now. I've done a tremendous amount of counting on here on accumulation structures of what has happened here for XRP. My thoughts are we're approaching the end. We'll see what happens with that whole appeal thing. But overall, in the context of the big picture, I'm optimistic. I think our biggest risk factors out there currently right now are the things we've talked about with those dynamics with the United States stock market. We have pretty much 4 examples of what happens when the stock market is breaking out into new all-time highs. And I won't go into extreme detail with that right now, but we know we're approaching October, we're approaching November. This is the historical timing of expansions when it comes to 4-year cycles, right? It has happened like clockwork 3 consecutive times. Here we are on the 4th one, but the very unique aspect of the market, of course, is that the breadth hasn't opened in the United States stock market, which was very similar to late 2019 and early 2020. My thoughts are that's our biggest risk factor out there right now. But we're also at the exact point where the breadth did open every 4 years, getting to this point, getting through the elections, and this is where it happens, which of course has nothing to do with block reward halvings. But we won't go too far there. But that's where we're at, right? We're at those 4-year points where the breadth has always opened. But the risk factor is, why has the stock market not followed along yet? And hopefully it's just now starting to. Otherwise, big picture, love what I see. Just trying to do psychological preparations in the event that we have to go through something like this, which is what we've talked about for weeks now. But the end prize being expansion. So we'll keep our eyes on the Russell today. We'll see how that thing does. Also, for the XRP people out there, a lot of mixed info out there on the SEC's appeal. I believe it was due yesterday, but there's a lot of debate on whether that's going to end up being today or not. So that's the big thing everybody is watching. Keep your eyes peeled on that. Otherwise, we'll check in on the markets tomorrow and we'll see what the Russell can do. But all right, that's going to be it for this one. If you're looking for something to do, of course, you could check out my newsletter over here at blockchainbacker.substack.com. And the most recent one talking all about expansions, the historical setups for them. Most recent one really diving into TVL, developer activity, user activity on the coins out there currently right now. You get access to all the past newsletters if you do sign up over here at Substack at blockchainbacker.substack.com. Of course, you could check out bcbacker.com with over 40 videos and 11 hours of content teaching you how to set up your own charts and indicators within TradingView and CoinTrader Pro. Otherwise, I hope you have a wonderful day, and I want to thank you so much for watching. If you could, please like this video and give it a thumbs up. If you are new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor, but if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.